Going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. Today we're going to go over the S&P 500 or SPY, which is the ETF of the S&P 500. The reason why we're looking at this is because it pretty much gives us an overview of the entire market and what the overall market is trending. So right now the market has been trending bearish for the last 4 months roughly. So ever since the Fed decided to announce that they will be raising interest rates, we've seen markets kind of come down, and then the Ukraine and Russia situation conflict haven't helped the overall projection either. So going into this week, we're officially going to be hearing about the interest rates. So back in November, December, they announced that they will be raising interest rates 4 to 6 times in 2022. They've settled on 5 times, with March 15th being the meeting in which they announced their first official rate hike. So for those who don't know about rate hikes or interest rates right now are nearly at zero. They are nearly at zero because at the height of the pandemic, which caused the market crash, the economy needed a lot of stimulation, and the only way that the Feds could do that was by printing money and raising and lowering interest rates. That way people are more inclined to borrow money at a cheaper price. When people are able to borrow money at a cheaper price, it makes them want to spend more, and it also allows businesses to borrow money at a cheaper price, allowing businesses to have money at hand without spending too much on interest, therefore making the stock market boom. And inflation also makes the stock market boom, because inflation means that the price of stocks is going to go up as well, just like the price of everything else. And so right now, inflation is sitting at a 40-year high, which is not a good sign for the American dollar. And the Feds are forced to raise interest rates in this coming week. Unfortunately, they can't raise it by the full amount that they wanted to raise it in. The reason why is because the Russian and Ukraine situation is impacting the market. So let's go ahead and talk about the levels that we saw us come down to since the beginning of the correction. So our lowest point since the beginning of the correction has been 410, which is our critical support coming into this week. You can see that at the lowest point in the last 4 months, we dropped to 410. Historically, during the times of any time that there's going to be a interest rate shift or the Feds are tapering their help to the market, we see markets come down 10 to 15%, which is exactly what's happened here. Also, another thing that tends to happen around wartime, which we're seeing right now, is also another 10 to 15% correction. So the markets are definitely pricing in the correction and the interest rates already, which makes us think that potentially when the interest rates do increase officially on March 15th, we could potentially see a strong bounce from the markets, because they've already kind of priced in everything that is expected in the coming meeting. So it's not uncommon for markets to sell off, leading to a bad event and then reverse on the actual event date, and vice versa for good events. That's where buy the rumors, sell the news comes from. So going into this week, we can see that last week on Friday, this red candle, it represents the full day movement. We opened at a high of around 429 and came down to close at a low of 420, which engulfed the previous day buying candle, which makes this a bearish engulfing, likely pointing to a bearish open going into tomorrow. So going into tomorrow and the day after and Wednesday, because the Fed meeting, we're expecting markets to kind of be a little bit volatile. Volatility does bring a lot of opportunity. If markets are flat for the first 2 days, then we can expect to see volatility after Wednesday for sure. Like I said, volatility brings opportunity, but you have to also know how to read a little bit of charts to kind of see where the relative strength is going. So which stocks are seeing the most strength on the bounces, and which are seeing the most selling strength on the sell-offs, and then you capitalize on those specific stocks. So in order to do that, you want to use the RSI, or the relative strength index here. Any stocks that you're seeing peaking over 70 points are relatively strong, and anything that is below 30 is relatively weak, and you want to look at the shorter term time frames to determine that. For example, when the S&P 500 sold off here, it had relatively strong selling, and we can see that on the bounce it didn't have really strong buying. Therefore, it couldn't really hold this place, hitting a double top and coming back down, also with strong relative selling, which is making us come back even further down. So you really want to pay attention to the RSI, or the relative strength index, when you're trading, especially on the shorter term time frames like the 5 minute, 1 hour, and then the daily for the overall picture. Now, in terms of levels to pay attention to ahead. As we mentioned, we want to try to maintain above the 410 critical support. If we break below, then we are likely going to come down to 400 as the next support, or the SP 500, because many people have already placed their stop losses at this point here. To the upside, we're going to face the resistance at 430, another resistance at 440. You can see that overall we are in a downtrend, and we will remain in this downtrend until the market is able to peak back over the 458 mark. So this is the most critical point that we need to get back above for us to be back in safe bullish territory. So considering markets are the way they are, and they are kind of whipsawing everywhere, you can see, is there still opportunity? Absolutely. The opportunity comes in stocks other than main tech. Well, you can play main tech. You can play many stocks right now on the bearish side if you know how to trade put options and short setups. There's plenty of opportunity. And then don't forget, you have inverses that you can also play, like the SQQ, which has been going up. SQQQ is the inverse of the tech index. Triple Q, which means it goes up when stocks are falling, or when tech stocks are falling. There's an opportunity here. There's plenty of opportunity in commodities. There's plenty of opportunity in oil and energy and precious metals. These are all opportunities that markets have been taking full advantage of. One thing that I want to point out is the increase in gold in the last few weeks. We can see that we actually put out a video back in the beginning of January talking about how gold is likely going to have a sharp increase as markets decline and to battle off inflation, and we can see that has carried out perfectly. So gold is another one to watch this week, as well as farm and agricultural products, which are also very important to watch, considering there is a lot of countries around Russia and Ukraine that do put out farm and agricultural products to the world, and they are likely going to see a boost on the stock market because of supply and demand theory. So anyways, if you guys did like this video, please give us a thumbs up. If you want to see more, subscribe to the channel. If you're not on YouTube, our YouTube is Hyper Stocks. We'd love to hear from you if you have any comments about any things that you'd like to see in the future. Thank you so much, and have a great day.